trading at. Rupesh Patel is with us. He's Senior Fund Manager Equity Investments at Nippon India Mutual Fund. Rupesh, good to have you with us here. Thank you for your time. The broader markets is where most of the action has been. We had Mihir Vora from Max Life yesterday with us, and he was telling us that the total AUM, industry level in mid and small cap funds is now greater than the AUM in large cap funds. And he was saying, well, he didn't think it's ever happened before. So pretty substantial what we're seeing. Just wanted to get your thoughts on that stat specifically, Rupesh, and then weigh in on the big correction that we saw day before yesterday. And in your opinion, are we back to the market looking up the mid and small cap part?
So first of all, thank you so much, Prashant, for having me on the show. Now, no doubt, today when we look at markets, there is a lot of euphoria considering the fact that we have hit all-time high and all. But if we step back and look a little longer-term picture and look at last 5 years, markets have given, depending on what index we look at, has given 11.5 to 12.5% kind of CAGR returns. This is considering the fact that today, in today's situation, the outlook for earnings growth is far better. Governance standards have improved, corporate balance sheets have deleveraged. So in that sense, I think painting the entire market in some kind of euphoria will not be a right conclusion. As far as relatively smaller cap companies are concerned, no doubt, there are, some pockets of exuberance. Some of these companies, yes, they have potential to grow. They have potential to become much bigger in size as we go ahead in time. But at current valuations, in some instances, we may be discounting too much and leaving very little scope for any kind of disappointment. We are probably not discounting that what happens if the macro changes, what happens when, in today's context, when global growth is slowing down, will their growth prospects remain intact and the competitive landscape changing? All these factors and many others which you can think of can have impact on their fundamentals and the value which we are ascribing to them today. So yeah, there are certain pockets, but again, as I talked in the context of overall market, I believe that it's not fair to paint the entire mid cap or small cap segment with the same brush. There are opportunities. We have to look at them on bottom-up basis and definitely at current valuations, invest from a longer-term point of view in them.
Hi, afternoon. Have you booked profits in any of the mid and the small cap stocks or themes in your portfolio? Because stocks have run up considerably in a very short span of time. So the risk reward for many, even though the fundamentals are good, may have turned unattractive. So do you want to tell us about some of your recent stocks and themes where you've booked profits?
Thanks, Surabhi. Actually, as far as portfolios are concerned, the exercise to constantly evaluate your position, evaluate them on risk-reward opportunities which are available in the market, and what kind of risk-reward you are having in the stocks which are there in your portfolio. So I think it's always a constant exercise, and profit booking, in some names would have happened. So nothing in specific which comes to my mind. But some of the stocks where we believe that a lot has been discounted in terms of their growth opportunity, and as I mentioned, some of the risks we are just ignoring. We have booked some profits there, but that is across market capitalization. Would not be right to put that in a particular category in terms of market capitalization.
Okay, got that, Rupesh. So generally, what is, let's talk about themes, because there are some themes that have been running red hot in this market, whether it's manufacturing or capex, PSUs, defense, railways. These themes which have already had a phenomenal ride and rally, are you still willing to back any of them? Or would you not put incremental money in, say, railways, defense, or some of these PSUs?
So we do have exposure to some of these themes where we very clearly see runway for growth, where if we look at their order books, there is visibility as far as revenue is concerned for next few years. But there are certain pockets where we believe that some of the growth which we are projecting that may not turn out, and we have decided to stay away from those spaces, or where we felt that valuations are probably discounting too much and execution can be a challenge. I mean, those are some of the pockets where we have stayed away from. So it's a mix of everything. I think in terms of opportunities, themes, as I have mentioned earlier also, we believe that financials in this market provides a great opportunity in terms of risk reward. And I mean, though they have underperformed in last 3 to 6 months, but we believe that that lenders within that, the large cap ones, where there is visibility in terms of growth, there are no concerns around their capital adequacy, asset quality, I mean, is no longer an issue for the system as a whole. And valuations in the context where their fundamentals are probably at their best, valuations are very reasonable in the overall context of the market. So I think that that is one segment where we still believe there is a lot of value to invest and be there.
Financials, large cap financials. Got that. Thank you very much, Rupesh. Appreciate you joining in, and it's a pleasure having you with us here on CNBC-TV18. Thanks indeed. We'll take a very quick break here. We'll come back. We'll get a check on what's happening in dealing rooms. Nimesh joins in on the other side. We'll get you some short-term trading ideas as well with our experts. Stay with us.